The Pareto principle holds true for GE Shipping's businesses. Shipping is 80%, offshore is 20%. What doesn't hold true is that one of them will grow faster, because both of them have grown at a very good pace in this quarter. So let's get in the management, Mr. G. Shivakumar, Executive Director and CFO of the company, to put the quarter into perspective and try and tell us what's ahead. Mr. Shivakumar, great having you. Thanks for joining in. Happy with the quarter, and is the momentum continuing, or are there more nuances to this?
Yeah, morning, Niraj. Thank you for having me. Yes, the quarter's results have been pretty good. There are a couple of things that we need to keep in mind. Rates are a little lower on the tanker side, and as you know, the tanker rates have been the massive driver of profitability over the last couple of years. Rates are a little weaker going into the usual summer lull period for tankers. So they're a little weaker than they were in the first quarter. In offshore, we also, of course, have repricings happening at significantly better levels than we had in the previous contracts. So on average, we're getting for the smaller vessels $4,000 to $5,000 a day higher day rates. And remember that these are typically costs are fixed. So this goes straight to the bottom line. In the rig business, there is a small setback, or you could call it uncertainty. We had bid into 2 tenders into India. We have 2 rigs coming off contract in the second half of calendar 24. They're coming off 3-year contracts. We had bid both into 3-year tenders in India. Both of those tenders have effectively been cancelled. So we are awaiting other tenders. In the meantime, we are also bidding for shorter term businesses in India itself. And we could look at going overseas as well. We'll look at our options. So in general, the offshore business pricing is picking up, and we've seen that in a lot of the vessels which have got repriced. In the rigs, we need to see what happens with the pricing. In shipping business, it's business as usual. No real change in the fundamentals of the businesses. Maybe a little bit of slowing. Some of the data seems to be showing a little bit of slowing in China. So steel production is a bit down year on year. Crude oil imports are a bit down. Refining margins in general are down, which means lower transportation of crude and refined products. So overall, within a very firm picture, there's some of these little factors which are causing some pressure, and these may be short-term factors really.
But so 20%, which is offshore, we learned that the offshore fleet for you, right, gets repriced. Maybe you spoke about it briefly, but the repricing is happening at charter rates which are what, 40-50% higher. So is that going to give a leg up to earnings in the rest of the year?
So yes, it's not just a 40 to 50% higher. These are 100% higher from admittedly a very low base of rates. So most of the repricing which are happening are at on average 100% higher than their earlier contracts, which were fixed in the low markets. So that will certainly give a leg up to the earnings. But just to put it in perspective, our profits for last year were about little over $300 million. And we look at it in dollar terms because our businesses are in dollars. If you reprice all of the offshore vessels and you get $5,000 a day extra on that, that's $35 million. So yes, it makes a contribution on the margin, but it's not, while we say double the rates up 100%, that doesn't mean that the overall company's profits, I mean the group's profits are going to be up that much, because you yourself mentioned it's 80-20.
Okay. There is a belief that ONGC tenders remain the key catalyst in FY25. Any updates there? Any thoughts that you can share with us?
Yeah, we don't have any updates. We expect a tender to come out in the next couple of months, but we will await that. We are as well informed on that as you are. So we will await that. In the meantime, as I said, we are looking for other options for employment of our rigs. And these could be short-term contracts. We used to go for long-term contracts consciously because we had quite a bit of debt in that business. Now that business is also net cash. And therefore, we will be okay with doing even short-term contracts. In fact, we're doing that for some of the vessels. where consciously we are keeping 4 or 5 of our vessels just doing short-term contracts because you can earn more on the short-term contracts uh, than on, say, a 3-year contract.
Got it. Okay. Mr. Shivakumar, 30-second answer because we have to wrap up the show. I'm out of time completely. What's the growth number that you anticipate for the year? Are you giving any formal guidance? Quick 30 seconds, please.
No, we don't give guidance. Our capacity is not likely to grow. If growth comes, it's going to come from day rate movement. And we don't see what the triggers are. It's very difficult to call the markets really because a large part of our capacity is open to the spot market. And in offshore, the rigs are open to the next tender. So it's really tough to give that.
Okay. But I would urge Mr. Shivakumar, maybe mid-quarter we should do a conversation because there's so much happening on the global front on your business side. We'd lovely to do a slightly longer conversation from our studios. So look forward to that.
Certainly, Thank you.
Thank you for your time today. Much appreciated. It's a wrap on this leg of Talking Point, viewers. Thanks so much for tuning in.